Hi, my name is Madelyn Ledoux, and I will be performing the DuPont analysis on McDonald's. The DuPont analysis begins with the equation ROE equals ROA times the equity multiplier. Return on equity is a profitability ratio that measures the ability of a company to generate profits from its shareholders' investments in the company. Basically, the ROE ratio shows how much profit each dollar of common stockholders' equity generates. Return on assets is a financial ratio that exemplifies the percentage of profit a company earns in relation to its overall assets. Equity multiplier is a measurement of a company's financial leverage. Companies finance the purchase of assets either through equity or debt, so a high equity multiplier indicates a larger percentage of assets are being funded by debt. The return on equity for McDonald's looks pretty high, so we like it. It's also fairly consistent. To dig a little deeper and look at what it's comprised of, we see the return on assets in the equity multiplier. We see that for every dollar of assets, McDonald's generates around $15 of net income. We see one higher value in 2011 and one lower in 2014. This could be because McDonald's uses their assets less efficiently or sold less food. The equity multipliers are not too high and not too low, and also fairly consistent. McDonald's seems to be comfortable with their level of leverage. There's a slight trend towards more leverage, but only slight. To look even further, ROA is comprised of the profit margin and total asset turnover. The profit margin measures how much of every dollar of sales a company actually keeps in earnings. The total asset turnover measures the efficiency of a company's use of its assets in generating sales revenue or sales income to the company. McDonald's is trending down, but keeps an average of 19.62% of every dollar of sales, or about 20 cents on the dollar. There's a slight downward trend, which complements the slight decrease in ROA in the more recent years. The asset turnover looks okay, but it's a little on the low side, implying the company isn't generating much revenue per dollar of assets. However, a quote-unquote good or bad asset turnover varies for each industry, and compared to its competition, Burger King, it's doing pretty well in this area. Overall, McDonald's seems to be extremely consistent and a very stable company, so I would have to say I'm loving it.